The E-mini yesterday was in a triangle. You got lower highs and higher lows, and that's after a very big rally for a couple of days. So strong rally sideways. For the bulls, it's a bull flag. They want the bull trend to resume, and for the bears, it's a lower high major trend reversal, maybe a double top. If we go up here, it'll be a higher high. A triangle late in a bull trend is usually a final bull flag. So even if we do go up, we'll probably have to test down here. So I think it reduces the chances that we're going to go straight up to a new all-time high. The odds are still greater that we're going to make a high than they are that this is going to be just a test of the high and that we're going to reverse. On the daily chart, we have a wedge, different ways to look at it. 1, 2, 3, or 1, 2, 3. And the bears are hoping we get 2 legs down. 1, pull back. 2, they're hoping for a bear trend, head and shoulders top, left shoulder, head, right shoulder. They're hoping this is the a lower high major trend reversal. They'll probably need at least a micro double top, and they might get it. When we were down here, I said we'd probably test the November 22nd high. Well, that's where we are right now for symmetry. So the bears might call this the left shoulder, or a double top left shoulder, and then a head, and then a right shoulder. This was more than a month forming the left shoulder. It's possible that we go sideways here for several weeks and form a right shoulder, and that we'll get a couple big legs up and down before the market decides whether to go down or whether to resume up. At the moment, it's still more likely we'll go up. We're getting higher high, higher high, higher low, higher low. So it's still more likely we're going to go up. But because the sell-off was so strong, it reduces the chances that we're going to go straight up here. You know, here it was strong and we went straight up. But it was only 2 days. This was 4 days. I suspect that we're going to have to go sideways for a few days and decide whether we're going to get a lower high and a test back down, or even a reversal, or just go up. So I suspect that it'll be sideways as well. Weekly chart, big outside down week last week, and this week reversing. And so far it's a high 1 buy signal bar. It's still possible it could become an outside week, that we go above last week's high, the all-time high, and then have an outside up week after an outside down week, which would be bullish. But these are pretty good bear bars. We have 4 pretty good bear bars in a short period of time. That increases the chances that we'll have to go sideways or maybe down before we get much higher. I think we're going higher near term over the next month or 2. I think we'll be higher, but I think we'll pull back. Monthly chart, we had a bear bar, and so far a bear bar. I've been saying January or February probably would be a bear bar. We still have half a month remaining, and January could end up as another bull bar. If it does, I think we'll probably get a bear bar in February and have a micro wedge. 1 pullback, 2 pullback, and then 3, and pull back for 2 or 3 months. Maybe test the December low, maybe test the October low. On the daily chart, here's the December low, here's the October low, and I think that's where the market is headed. But I also think we have not finished going up yet. So I think we'll probably get 1 more high and then come down and test either the December low or the October low. Maybe we'll get up to 5,000 and then pull back. If we went to 5,000 and then came down to 4,000 here, this breakout, that would be about a 20% correction, and that's probably about as bad a correction as I think we'll get this year. I think we're going down to 4,000 at some point, probably this year, because on the way up, we stopped at every big round number, 3,400, 3,500, 36, 43, 44, 45, except one, 4,000. We broke strongly above it, so there's a gap between this low and that high. We spent no time at 4,000. So I think we're going to come down and test it probably this year. The other chart, yesterday. You can argue it's a lower high and a sell signal bar, but it's a doji and it's after two big bull bars, so there probably are buyers below. And we're at a price where the market struggled for a couple of months in here. So, and we stalled yesterday, so I think there probably are sellers above yesterday's high. I don't think we're going to go up very much. I don't think we're going to go down very much. And that leaves us with sideways. So today will probably be another mostly sideways day. First bar, a doji bar, tested the November high again. That's this high back here. And the bears are looking for symmetry. This is where we stalled for the left shoulder. They're hoping we stall for the right shoulder here as well, and then reverse down. We might reverse down, but I still think the best the bears will get is the trading range. I think we're probably going higher. This is very strong. This is very strong. We probably have to go higher. Now, I said it's a weak sell signal bar. Can you buy the one low? I would not. Moving average and yesterday's close are magnets below. This December 16th high, I think, is less important. 60-minute chart. That was this high. I'm going to remove that. I think the November 22nd high is more important, and they're right around the same price. Back to the 5-minute chart. Bulls want a high one. We have a higher low, and then a series of higher lows here. This was a small triangle within a bigger triangle. And they're hoping the bull trend is resuming. But big bull bar, good. But big tail bear bar, this does not look like a strong rally. Bear bar here. So it reduces the chances of this going a lot higher. Traders want to see what's above yesterday's high. So we might get up there. But, and we have a possible gap. Whenever I see the market sell off and then rally, I always look to the left to see if there's a possible gap. And there is. This did not overlap that, and therefore possibly a measured move up from that low or from this low. Takes us exactly to yesterday's high. Now, is this a possible low of the day? Of course, all right. Is it a likely low of the day? No. So you can buy above 2, a high one buy, but in a weak rally in a resistance zone, yesterday's high, top of a trading range day yesterday, and then the November 22nd high, I would like to see consecutive bull bars with at least one being a big bull body and closing near its high before I buy with the stop. And the opposite is true for sell to close. I want to see consecutive bear bars with at least one bar being big and closing near its low. So if 2 were to close on its low and have a pretty big bear body, then it would be sell to close. We would be reversing down again from that November 22nd high like we did yesterday. That was also a breakout of the Globex high. There's the Globex high. Looks like a spike pullback channel, but it also looks like a possible measuring gap there. We've already gone beyond the measured move from, well, let's check this low to that high. So we still might go up to that. So we have an attempt at a spike in channel top, 1 pullback, 2 pullback, and instead of 3 forming a reversal, 3 was a breakout. And that's the measured move, and it's right near the Globex high from yesterday. Bears trying to get a low 2 top, a very common type of top. So we broke above the November 22nd high a second time today, and we are reversing down a second time. That's a higher probability sell and a better candidate for the high of the day. But it's a 3-bar tight trading range, and the bars are relatively big. So if 3 closes on or near its low is a sell, possible high today, but it's a swing only. You cannot scalp because low two tops, they're basically 50-50 bets. Same with high two bottoms. Unless they look exceptionally good, they're not high probability trades. And if you're taking a trade that's not a high probability trade, you have to be going for a big profit. So if you have a 50-50 trade, you want a reward at least twice your risk. So if you're selling below 3, you need the market to come down here for the trade to make sense. So yeah, you can argue micro double top, a second reversal down from just below yesterday's high and from just above the November 22nd high. And it's also a little bit of a parabolic wedge with 70 and 77, all good. But it's a tight bull channel, and the screen is a mess. It's a trading range. The market keeps reversing, and that reduces the chances that we're going to go straight down here. So for the bears selling below 3, not only do they need it to get down here to make it worthwhile, it's probably not going to go straight down. It'll probably be like this, try to go down, up a little bit, down, and then bull bars. So it's really a difficult short. And we're right above support. Yesterday's close in the moving average. So I think we'll go down in the next 2 or 3 bars, but really not a great short. It's because it's not strongly bullish, and we have magnets just below. We probably have to go down and test the magnets. Yesterday's close moving average. But a 3-bar tight trading range at the top of a trading range day. Really not strongly bearish. And if it has a conspicuous tail below, let's say a 4 or 5, 6 tick tail below the bar, fewer bears will trade it. So if you sell it, let's say it closes on or near its low, and you sell it, your stop is above the high of 3, and so you'll be risking about 10 points. It's probably better to trade a much smaller position. I talk about having 2 position sizes. So if you normally trade 5 E-minis, trade 1 E-mini. If you normally trade 5, if you normally trade 1 E-mini, then trade 5, and then trade 2 micro E-minis. Each micro E-mini is each E-mini is the same as 10 micro E-minis. So the second position size, I would have it be about 20% of your normal size. And I would not have a whole bunch of other position sizes. I would just have 2. So for most trading, you trade your regular size. And if things don't look right, or if bars are big, trade the much smaller position size. Okay, so for the bears, it's a micro double top, a low 2 top, but a big doji, and now a 4-bar tight trading range. So I'm not going to sell below 3. And for the bulls, they have a high 1, 2. It triggered on 3. We did not go below the 2 low. So right now it's still on the buy above 2. What about buying at the market and putting a stop below 2 since it's still long? Well, your risk would be less, but your probability is also less as well because 3 overlaps 2 a lot and it has a bare body. Best choice, wait. High 2 and low 2, a tight trading range in doji, limit order market, probably more sellers above and buyers below. And the buyers are probably not at the 4 low, they're probably around the moving average in yesterday's close. So we're still on the buy above 2, and this is a second buy, but it's weak. We've only had 1 bull bar in the first 3 bars. I think best choice is flat. bulls were still on the buy above 2. But some bulls disappointed 3, 4, 5, who bought the 2 close or the 2 high, will be disappointed and exit. So we might get another attempt at a double top. If I had to be in the market right now, I'd be long. We've only had one good stop entry signal today, and it's buying above 2. I'm currently flat. I did not buy above 2. If it's going to be a big bull trend, does it matter if I wait to see if we get consecutive big bull bars, 6, 7? Yeah, I'll be entering a little bit late, but if it's going to be a big bull trend day, or even a swing up, it'll probably last 10 bars or 20 bars. So if I miss the first 2, that does not bother me. I would have higher probability, which is what I would like. We just went above that measured move target on the Globex chart over here. We have this gap, this low, that high. There's a gap between those 2 prices. Possible measured move up, and we just got there. I'll remove that. Still limit order trading. It goes up a few points, they sell. If it goes above something, they sell. Above 2, above 1, above 3, above 4, above 5. Every one of those bears sold. Every one of the bears who did sell and used wide stops and scaled in, have made money. So the bears are making money in a bull channel. So it's not a very strong bull channel. There was one limit order buy below 1, and 2 stop order buys, 2 and 4. And I think none of those was particularly good. We're still on the buy above 2. And where's your stop? Do you get out below 6? You might get out a couple points below 6, but then you're near the 2 low. So it's probably better for those bulls to keep their stop below 2. As I said, I'm flat. Bulls trying to get above yesterday's high. And we have a possible measured move up based upon this low and that high. Important magnet below is the apex of the triangle. This is approximately the triangle. And the apex is usually not all that clear, but somewhere around the 74 close is the apex, somewhere maybe just below 78. That triggers the low 2 top, a second reversal down from just below yesterday's high and from below the November 22nd high. But bad sell signal bar 6, bad sell signal bar 1. I said I thought we'd come down to the moving average. And if we do it, we might come all the way down here to the apex of the triangle. Possibly yesterday's low, possibly the 60-minute moving average. Today might be an inside day. We're reversing down from just below yesterday's high. Yesterday was a trading range day, and we may get stuck back in yesterday's trading range here. Better to be patient. It's very easy to be excited in the first hour and quickly take trades and then lose money. A couple trades, you quickly be down 8 points, 10 points, and then the remainder of the day, you just are upset, hoping to make back what you lost on the open taking bad trades. And then by the middle of the day, you're hoping to make back half of what you lost. The bars tend to get smaller, and the market tends to get more sideways middle of the day, and it becomes hard to make a big profit. What happens if 7 is a pretty good bull bar closing near its high? That would be a better stop entry buy. And for the bears, they do not have a good stop entry sell yet. And they do not have consecutive bear bars with one being big yet. So for stop order traders, it's not not good enough yet. Stop order bulls or bears. Breaking out new low of the day, testing moving average, testing yesterday's close, but only a single bear bar. So I think it's not yet sell the close. Bulls will try to get a double bottom 2 around yesterday's close. But after a big bear bar 7, the bulls would need a pretty dramatic bar 8 to attract buyers. Chances are we're going to go at least a little lower. Bear surprise bar 7 probably will get at least a second small leg sideways or down. That will reduce the number of bulls buying above 8. Consecutive bear bars with at least one being big, so it would sell the close. Stop above 6 theoretically, but I would get out 2 or 3 points below, 2 or 3 points above any bear bar. Bears hoping for a measured move down to the apex of the triangle. Trading range open. There's the top. There's the bottom. And measured move right around the apex of the triangle. Is there any reason to buy above 9? Failed breakout, test of moving average, test of yesterday's close. I would not. It's a bear surprise. There is an important magnet below, so there probably are sellers above 9. Is this going to be a huge bear trend day? Probably not. We have a trading range open. Yesterday was a trading range. Both of those things increase the chance of a trading range day today. We have consecutive bear bars, both closing near their lows, but only one being big, so we're not racing down. Remember I said that if this is the high of the day, we're probably not going to get a strong trend. We'll probably bounce and then get a lower high or several lower highs and channel down. 6, a bad sell signal bar, so some bulls bought the 6 low, bought more lower, expecting it to get back to the 6 low. And at this moment, I think we will. Bears, if they're short, they can keep a stop above 6. They can get out above a bull bar, especially a bull bar closing near its high. They can get out 2 or 3 points above a bear bar. If they do get out, then they can sell again if we get a lower high. But I suspect we're going to get to that 6 low because it's a bad sell signal bar. And we have a lot of trading range trading. Getting near the end of the first hour, traders are starting to think about what the first 60-minute bar will look like. And so far, it's a bear bar closing near its low for a small double top, around a 50% retracement of that big sell-off, and it's a test of that November 22nd high. Here's that November 22nd high. At this general price area, we sold off, we sold off, we sold off, we sold off. We broke strongly above it, but then we broke strongly back below it. We sold off, we sold off, we sold off. So for some reason, I don't need to know why, the market views that price as the resistance zone. 3 consecutive bear bars, still sell the close, but because of all the trading range trading, we're probably going to get a bounce at some point. So the bears will have to make decisions. It won't be easy. The bars are not particularly big. Look at the size of these bars and the size of these bars. Not much difference, about the same. This one's a little bit bigger, but these two are pretty average. So we're not falling with a lot of momentum. It's not like everyone says that, wow, the price is terribly wrong. Look at yesterday's sell-off. Much bigger bars, much more potential for some kind of a measured move down. at the measured move target. Yesterday's low, 60-minute moving average, magnets below. Still sell the close, but I would get out on a bounce and then look to sell again if we do go up. It's still sell the close, but it's a slightly bigger bar, and we're at the apex of the triangle, one of the targets. So there might be some profit taking here or soon. And magnets below, 60-minute moving average, yesterday's low, and the Globex low. What did we do at this price in the overnight session? Well, we were sideways here and here at this price, so we may bounce here. Plus, we're at our target, the apex of the triangle. Strong enough sell-off, traders will expect at least a small second leg down. Can you buy above 11? Can you buy above 11? Sell climax. Well, as I said, if it's a bull bar, especially a bull bar closing above its midpoint, I would get out of shorts, but I would rather buy a second reversal up. So I would not get long above 11. And for the bears, it's a low 1. But we're back in yesterday's tight trading range, and that increases the chances that we'll go sideways here, at least for a few bars. So that will reduce the number of bears selling below 11. This is the end of the first hour. It affects the appearance of the first 60-minute bar. And right now, it's a pretty good bear bar. But if we bounce on the 5-minute chart, we'll get a bigger tail on the 60-minute bar, and that will reduce the number of traders willing to sell below the low of that 60-minute bar. If it closes on its low, you'll get some bears selling. It's a second reversal down, but they know it's probably a minor reversal. Maybe we'll come down here over the next couple of days. Traders who are short, if they did sell below 7 or below 8, I would take partial profits here. They got close to 10 points, which is reasonable when you have a lot of trading range trading. Nowadays, 10 points is kind of like a scalp, 5 or 10 points. What happens if we keep going down all day? And let's say you take partial profits here. Let's say you take half off. If you're trading 2 micro E-minis, let's say you take 1 off. Well, you can put the other one back on if we get a lower high. Low 1, but a bull bar. So might be buyers below 11 and buyers below 10. So I would not sell below 11. We're at the end of the first hour, bar 12. The bears trying to get as strong a bear bar as they can that will attract additional selling on the 60-minute chart. So traders who trade the 60-minute chart, more of them will be willing to sell in the second hour if the first hour closes on or near its low. Bar 12 often reverses, weakening the appearance of a 60-minute bar. You can see more traders bought the 11 low than sold it. Who are the buyers? Well, some are bulls looking for a bounce, and then others are bears taking profits. Market's deciding, are we going to close near the low of the hour or significantly above? How strong a sell setup will there be on the 60-minute chart? Is this the start of a spike in channel bear trend? So is it a spike and then a pullback and then we channel down all day? I don't think so. Spike down, sideways and channel, spike down, pause, and very tight channel. The bears would like that, but I think more likely trading range. So more likely we're going to bounce possibly here, probably soon. It's hanging around the low of the first hour, so we're probably not going to bounce on 12. And if the 60-minute bar closes on or near its low, we probably will have to go below the low of the bar, which means that we'll probably go below the 10 low. Low one, sell 11. I did not take it. I am back to flat. I thought it would sell to close 8. And then we got that tail 10. For me, I usually just go flat if I think we're probably in a trading range. Micro double bottom, 10, 12. Bears, I'd get out of shorts above 11. You can sell again if we get a bear bar, 13 or 14. And for the bulls, it's a possible low of the day, but I'd like to see more bull bars. So, it's a 6-bar bear micro channel. I'm not going to buy the first reversal up. What happens if we get a pair of big bull bars? Then it could become buy the close, like yesterday. Big sell-off and a couple bull bars. Here, it's actually a good stop entry buy. But here we have consecutive bull bars, one being big, not quite closing on its high, but it looks like a credible bottom. So you buy the close, buy at the market, buy on a stop above. So I'd get out of shorts above 11 or above 12. And we may stall at the moving average and go sideways for a few bars and then form a low 2. For the bulls, micro double bottom, sell climax, test of the apex of the triangle, possible low of the day. But I'd like to see at least one more pretty good bull bar. Remember how I said bar 12 often reverses enough to weaken a 60-minute bar, and that's what happened here. That's the close of the hour, fairly far above the low, and we ended up with a fairly conspicuous tail on the 60-minute bar, making it a weaker sell signal bar. Fewer traders will sell with a stop below that bar, given how strong this is. If you're selling in a strong bear trend, you want strong sell signal bars, not that, and even though this has a good bear body, it's a pretty big tail, and it's an 8-bar tight trading range, so that's not a very good stop entry sell. Remember I said the market might stall at the moving average and try to form some kind of a sell signal. Here, a low 2. Might get 00, outside up 12, might get outside down 13. That would be breakout mode, so theoretically bulls would buy above 13, bears would sell below 13. But it's also a tight trading range, and we're in yesterday's trading range. So the probability is less, and the bar is huge. It's 10 points tall. So if you sell below 13, yes, it's a possible start of a swing down, but the risk is big and the probability is not all that good. So I'm back to flat, and I'm not going to sell below 13. I did not buy above 11 or 12, and I'm not selling below 13. It's too big. The risk is too big, and the probability of a significant move is not very good because we're in yesterday's trading range. The bears selling want a measure move down to the next important support, which is the 60-minute moving average. Breakout mode, 50% chance there'll be a successful bull breakout, 50% chance a successful bear breakout, and 50% chance the first breakout up or down will fail. So there are often breakouts of 00 patterns that fail. Okay, 00 bear breakout that failed. Bear trend, outside down, outside up, we broke below, it failed. Bear trend, consecutive outside bars, this bull bar went below that, and the 00 failed, reversed up. Traders will buy the reversal up, or they'll buy on a breakout above the 00. Let me put that part in there. So they'll either buy the reversal up or they'll buy above the 00. 00 in the start of a bear trend, it went below it right there. That doji went below that big bear bar, but reversed up. Bulls will buy the reversal up. 00, bear bar closing on its low, but late in a bear trend, possible final flag. So it's a sell, but if you get a bull bar within the next few bars, it's a buy, betting the bear breakout will fail, and maybe we will reverse up. This is similar to today. Today it's much more climactic selling, but it's a big outside down bar late in a bear trend. Big outside down bar late in a bear trend is an 00, but that tail on the bottom in the context is bad for the bears, or bad for the bears. We were in a limit order market here. Bulls who bought the 12 low made money. They buy the 12 low, buy more, a point or two lower. It gets back above the 12 low. They get out, break even on the first buy and with a profit on the second buy. I said I would not buy above 11 or 12, that I wanted a second buy. We might get it, bar 14. Bulls will want a pretty good bull bar. Now, what's the problem with buying above 14? Well, one problem is it's bar 14 and not bar 16. And the reason I say that is the market often tries to reverse around bar 18, 90 minutes into the day. And usually the window begins at bar 16. So it's more often that you'll get a reversal bar 16, 17, 18, 19, 20, and less often you'll get a reversal 14. Here the context is good for the bulls. If they get a pretty good bull bar 14 closing on its high, it's a reasonable buy. But if 14 is not perfect, I would not take the buy because we're just a little too early. It reduces the chances of a successful reversal up. What I would like is for the market to break below 13, trigger the 00 sell, and then reverse up 16 or 17 for possible. If 14 closes on its high, it's a reasonable buy. I probably will buy it, even though it's not bar 16. What I'm hoping is we break below 13, trigger the sell. I'm not going to take the sell, and then hope that we reverse up on 16. So trigger the 00 sell by going below 13, and then reverse up a few bars later. I tend to like 00 patterns, but this one has the problems that I said. The bears want a break below yesterday's low, a break below the 60-minute moving average. I do not think we'll get a successful break below those. I think they'll hold. So I think if we do break below yesterday's low, we will not get far below it. Remember, yesterday's a sell signal bar on the daily chart for a lower high. But it's a doji bar after two very big bull bars. Probably more buyers than sellers below yesterday's low. But the market might want to get down below yesterday's low to find out. Maybe we will collapse. Nobody believes that we will, but it's still possible. But a lot of traders want the market to go below yesterday's low to see if in fact it is a bad sell and if there are buyers below. On the 5-minute chart, there probably are buyers below because it's a trading range and traders tend to buy below things and sell above things. We went above the trading range here. Here's the trading range. We went above it and there were sellers above. If we go below, buyers below. So the bears had a low to top 6, but a bull bar, not a good sell signal bar, yet we went down. The bulls have a high to buy, 11, 14, but not a good buy signal bar. We could still go up, just like we went down below 6. I'm not opposed to buying above 14, but like with 6, I didn't sell below 6. I waited for the two bear bars, 7, 8. I probably will wait to see if we get a couple bull bars, 15, 16. Bulls want to see what's above 14 on the 5-minute chart, and everybody wants to see what's below yesterday's low on the daily chart. But as I said, we may not get there. Today might remain an inside day, not going above yesterday's high, not going below yesterday's low. What happens if we get a bull inside bar 15? It'll increase the number of buyers above 15. What happens if we get an II? That would be perfect. I would like that because an II often leads to a reversal. And in this case, more importantly, if we get an II, bar 16 would be the second bar. And I prefer to take reversals on 16 or later. If there's going to be a reversal after the first hour, I like to have it come bar 16 or later because it has a higher probability of succeeding. Bar 16, 17 inside bar, reversal. Bar 16, 17, 18, reversal. I don't have numbers back there. But if a reversal comes a little bit before, unless the context is very strong, there's less chance of a successful reversal. If 15 closes on its high and it remains an inside bar, it's a reasonable swing buy. I would not buy for a scalp. We might get a third leg down, 1, 2, and 3. So it's not a strong buy above 15. But if it closes on its high, it's a reasonable buy. If you buy above 15, what do you do for your stop? Most traders should put their stop below 14. More experienced traders might use a wider stop, a very wide stop, 20-point stop or something, and buy more at the 14 low. So if it goes above 15, it triggers a high 2 buy. If it goes below 14, there probably will be buyers below, and then we'll have a wedge, 10, 14, and who knows, 17 or 18. I want it to go down and then reverse up on 16 or later. That, I think, would be a higher probability buy. The 4,700 big round number is also a magnet below. And it's right around the other two, yesterday's low and 60-minute moving average, and actually this measured move as well from the 00. We triggered the 00 on 14, but a bad entry bar. Now we have a low one, 15. We're still always in short, but it's no swing. The bears selling are hoping we come down to this other cluster of magnets below, and bulls are hoping that we get a small wedge, 10, 14, 16. There's still a buy above 15. Arguably it is, right? We got a wedge and a reversal up, but I think most bulls should look to buy above a bull bar, even if 16 is an outside up bar. You can see the confusion, right? It looks like it's going down, it looks like it's going up. No, down, up, right? Lots of reversals. Limit order traders are easily making money. That's trading range type of behavior. And look to the left. What did we do here? Every couple bars we reversed. So the market might do that same thing here. We're on the 00 sell below 13. Stop theoretically is above 13, but I would get out above a bull bar, maybe 16, or a point or two above any bar, 14. And bulls, they want to buy, and they want to buy with stops, but they want a bar closing on or near its high. So 16 or 17. 16 went above 15, right? So some bears might have gotten out. I would get out above a bull bar and maybe a point or two above a bear bar. Bulls hoping for a perfect buy signal bar, probably not going to get it. Look at the screen. Tails all over the place, right? Trading range behavior. So there will be problems with everything, right? Trading range behavior. So there will be problems with everything. The more 16 closes on its high, the more bulls will take the buy. the more bulls will take the buy. The bears, some bears get out above 14, some have a stop above 13, the top of the 00. We still have magnets below. Measure move, 60-minute moving average, yesterday's low, 4,700 big round number. And we're not at that support zone, which is a magnet. For us to reverse up, the bulls will want a good-looking buy signal bar 16, although wait to see if we get consecutive bull bars, maybe 16, 17. So far, not looking very good for stop-entry bulls. So I would not buy, I am not going to buy above 16. And I'm currently flat. I did not sell below 15. Bears getting another breakout. The bulls who bought in here, hoping for a reversal up, are panicking. They're selling, and it's causing this big bear bar, a bear surprise. The more it closes on its low, the more we'll get a couple legs down. Bulls hoping it'll be a wedge, 3 bottoms, 2, 10, and then 18 or 20. Getting down to all the magnets, probably will go at least a little bit lower. Sometimes the market will race down to yesterday's low and not quite get there, or hit it exactly, and then reverse up for the low of the day. Sold off strongly to just above yesterday's low, and that was the low of the day. Collapsed, and just above yesterday's low of the day, reversed up. Big sell-off, reversed up just above yesterday's low. Reversed up just above yesterday's low, just above yesterday's low, just above yesterday's low, above yesterday's low. Now, here, yesterday's low, here, end of the day. It hit exactly yesterday's low, reversed up, despite a 4-hour bear trend. And the reason why I have so many examples of this is it's a fairly common thing. I'm going to get rid of that measured move. The correct measured move now is 16. Can this become a huge bear trend day and this whole thing become a measuring gap? It's possible, but I think, as I said, I think there'll be buyers in this support zone. 60-minute moving average, yesterday's low, measured move, 4,700. Is 17 mostly bears selling, hoping that we're going to get a measured move down, or is it mostly bulls selling out of bad longs? It's probably mostly bulls selling. Bears want a measured move down. They're hoping that this is going to be a measuring gap. And that gets us down here. They're hoping this is a gap and that we trend down and reach this. We might, but I think it's more likely we'll find support in this general area. At support, 60-minute moving average, you can see some buying taking place. 60-minute chart. Very strong rally. So bulls buying around the 60-minute moving average and buying near yesterday's low. Bulls want a double bottom at the 60-minute moving average. And bears want a reversal down from a double top. Double top, neckline, measured move down. It would be about a 50% retracement of that. Now, if you were watching live news, they would say, oh, somebody just said blah, 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 and that caused 17. And it contributed to 17. But what really caused 17 is the absence of buyers, not enough bulls. So the bulls who were buying in here, hoping for a bottom, are giving up. This is bulls selling out of longs. Bear surprised typically you'll get at least a small second leg down. Bulls hoping it's a wedge bottom, 3 bottoms, but big enough surprise, good enough context, probably will get at least a small second leg down. That means traders will sell the first reversal up. We're in that window when reversals tend to occur, bar 18, but with the bear surprise, we'll probably get at least a small second leg down. Like yesterday, bear surprise 20, we got a second leg down, and then the bulls had a better chance of getting a reversal. Bulls hoping this is just a sell vacuum test of yesterday's low, and that we reverse up from just above yesterday's low. I showed many examples of how the market can sell off strongly to yesterday's low or just above, and then reverse up for the remainder of the day. Because of that, and because of the wedge, and because yesterday's trading range day, if we do get a good buy signal bar, 18, if 18 closes on its high, it's a credible candidate for a swing up. Right now, it's slightly more likely we're going to go below yesterday's low. Right now, it's slightly more likely we're going to go below yesterday's low. $18, an inside bar and a bear trend, so it's a low one. But if it's a bull bar, it'll be similar to 11. There might be more buyers than sellers below. What happens if 18 closes near its high and you buy above, and then the market goes below 17? Then you just get out and take your loss. If you want a higher probability, instead of buying above 18, you wait to see if we get a couple bull bars. Remember, you're looking for a big reversal, and it doesn't matter if you wait for 2 bull bars, there's still a lot of profit potential left. You can take the first buy. Here, I would take the first buy. A perfect bull bar, a perfect test of yesterday's low, and a micro double bottom. So I would take that first buy. But you could always wait for another big bull bar and then buy. There'll still be plenty of profit potential. Some traders will take the first buy, some will wait for 2 or 3 bull bars and then buy, hoping for a swing up. Not a good buy signal bar. Micro double bottom. Bear surprise. This tail might be the second leg down. So it might be 1 bounce and then 2 reverse. You can buy above that, or you can wait for bull bars closing near their highs and buy. Plenty of profit potential remaining. So you don't have to take the very first buy. What happens if there is a 4-tick tail on top, like this? You'll get fewer bulls buying above. The more it closes on its high, the more bulls will buy above. The bigger the tail, the more bulls will wait to see if we get a second consecutive bull bar. That's an example of what I mean, right? It's one of those gray zone things. You take it. It's okay to take it. Your risk is big, but you're looking for the low of the day. For the bears, it's a low one, but it's a bull bar at support. So might be more buyers than sellers below. So I would not sell below 18. I think it's an okay buy, but if you want higher probability, you wait to see if we get 2 or 3 bull bars. Today might remain an inside bar on the daily chart. This could be a sell vacuum test of yesterday's low. If you trade it, it's okay to trade small, and then if it keeps going up, you buy more as it goes up. I often do that. Where do the bulls get out? Right now, I'd get out below 17. I'd get out 2 or 3 points below any bar, 18, 19. I would get out below a bear bar closing and it's below its midpoint, maybe 19. And for the bears, it's a low one, but to short it, you're selling in a support zone, so you'd like as strong a sell signal bar as you can get. You'd like a big bear bar closing on or near its low. Still a body gap. breakout point 15 low, and the bodies of the reversal have not overlapped, so it's still a possible measuring gap. And we got a possible measure move from here to here, but the bears want the measure move from here to there, and they want this to grow into a huge bear trend day. What happens if 19 is not a bear bar? Then probably buyers below 19. Bull bar might be buyers 18 low, but I would get out below 17. I bought the 18 high and the 18 low. I could exit part right here, and that would lower my entry price to the 18 low. But we'll see what we get on 19. Yeah, not all that good. So I'll lighten up, reduce my position. I could get out. I'm probably going to get out completely pretty soon if it doesn't go down. Surprise bar down 17. Expect at least a small second leg sideways to down. 19 was that second leg. What did 19 also do? Well, there were some bears who sold the close of 19. Some bears who sold the close of 17. Disappointed 18. They placed limit orders to get out, break even around that 17 close. And it went below the 17 close and reversed up. That tells you that a lot of traders bought. Many of those traders were bears buying back shorts. Others were bulls who bought the 18 low. Still not clear, but I think more bullish than bearish. The bulls need to start to get some bull bars. Some bulls who did not buy above 18 want to buy, but they want to buy above a second strong bull bar, so they're hoping 20 closes on or near. Traders are still deciding, is this the low of the day, or is 17 a measuring gap for a huge bear trend day? Right now, I don't think we're going down here. And it's on a credible buy above 18, below 18. But the bulls would like to start to see additional bull bars closing near their highs. For the bears, a low 220. If it's a bear bar, credible short, I think a lot of the bulls will give up below 20, especially if it's a bear bar. What's the problem with it? With a low 2 short? It's not at the moving average. And unless a trend is very strong, a lot of low 2 bears, low 1 bears prefer to short if the bear flag touches the moving average or is very close to the moving average. This is not very close to the moving average, and therefore bears are selling reasonably far below the average price, yet the trend is not far above average bearishness. So low 2, bull bar 18, bull bar 20. I would wait to sell. For the bulls, they can get out of the market. They can get out below 17. They can always buy again if we get a better bull bar, 21, 22, 23. I'm back to flat. It's not doing what I want. You can see a lot of traders exited on the close of 20 with that big tail. You can see 21 immediately went down. And that was mostly disappointed bulls giving up. Do I think there are more buyers or sellers below 20? It's a bad sell, so there probably are more buyers below. And some of those buyers might be the bulls who sold on the close of 20. They may be switching to scalping mode. I'm flat. I did buy 18. I did not buy 20. And I did not sell, so I'm flat. Bearish, but not as bearish as the bears want. And the bulls are trying to get a reversal, but so far they're not getting what they want either. A lot of trading range trading here, and then from 11 to here, a lot of sideways trading. I still think it's more likely that we're going to spend a lot of time today going sideways than it is that this bear trend is going to continue all day. Bulls still could be long, stop below 17, and bears a low 2, but I would not sell below 18 or 20. What happens if 21 closes near its low? Well, bears could sell that, but you're right at a big support zone, and it's not all that bearish. So this is not good for stop order traders selling below 20, selling below 21, and for stop order bulls buying above 21. They'd like to get a bull bar at 22. The more 22 closes on its high, the more bulls will buy above. If it closes on its low, a bear inside bar, you'll probably get some stop order bears selling below, hoping that we're going to get a measure move down, that 17 is a measuring gap. Bulls are hoping it's an exhaustion gap, that it's an exhaustive end of the trend, and that will start to go either sideways or up. What happens if 22 is a small bull bar? It'll reduce the number of bulls willing to buy above it. What happens if it's a bear doji? It'll reduce the number of bears willing to sell below it. So right now, it does not look like it'll be a good stop entry bar for the bulls or for the bears. For the bulls, they're still on a buy above 18. And for the bears, they have a bad low 2 sell below 20. High 2, right? We're still on the buy above 18. We have a small double bottom, 17, 21, a higher low double bottom, neckline 20. So some bulls will buy above 20. Some will wait for 23 to close. And if it closes at or above the high of 20, then they'll buy, or they'll wait for a break above the moving average. And bulls who are long, if they're long a small position, can add on with each additional buy signal. In this kind of a situation, I think it's reasonable to buy small and then buy more as it goes higher. So either buy the market, buy on a stop above 20, wait for 23 to close, buy above 23, especially if it closes at or above 20. You can buy more if we get consecutive bull bars breaking above the moving average. One target above is the 12 high. Theoretically, it's a buy signal. So scale and bulls buy more above 18, hoping it gets back here. They can get out break even on their first buy with a profit on their lower buy. Everybody wants a strong trend, but look at the screen. Probably not going to get a strong trend. So if this goes up, it'll probably go up with pullbacks, pullback, pullback. Bears selling at the moving average, like on 13. They want a bear channel, and they want every touch of the moving average to reverse down. But 23 closed on its high and above the neckline and above the moving average. Right now, we're probably always in long. If 24 is a big bear bar closing there and slow, reasonable to get out of longs below it. And for the bears, it's a lower high and a bear channel, a low to 20. I would not short it. Surprise bar up 23, close above moving average and the neckline. Probably will get at least a small second leg up. Because it's a trading range day, it's reasonable to take partial profits at 10 points, maybe even 5 points. We're in the target zone right here. What happens if 24 closes on its high? Well, that would be consecutive big bull bars. Probably we would continue higher. So that's a good enough bull surprise so that we should go higher. Might pull back first, but right now I think we're always in long. We're near the first target, 11 high, 12 high. I did buy above 20. I bought above 23 more. I'm taking part off here. Why take part off here? The screen trading range. And very often you get a strong move that reverses. Big move down, 17, reverse up. Possible second leg trap, 1 pull back 2. Very common in trading range. For the second leg up, instead of being a successful breakout, it becomes a trap and the market goes back down. Also, today so far is a trading range day. That reduces the chances that this is going to be a bull trend lasting all day. And therefore, it's better to take profits when you have them, or at least partial profits. Take profits when you have them, or at least partial profits. Trading range days have a lot of reversals, so it's better to take profits when you have them. You can always enter again on the next signal. Will this come down and test the breakout point, 20 high? It might. It would be better if it did not. If it does, that would increase the chances that we're going to form a trading range here. If it does not, that increases the chances that we'll try to get back up here. Bulls, reasonable to get out below a bear bar, especially if it closes near its low. And for the bears, a second leg trap, double top 12, but bull surprise 23, 24. I would not short below 25. I'd wait to see if we get 2 or 3 bear bars. 23 closing above the moving average and above the neckline 20 reduces the chances of a successful reversal without at least a micro double top. Bears, I would not short below 25. Bulls, they can get out below 25 and then buy again if we get a high 126 or 27. Bulls are hoping that this is a wedge bottom and that we rally all day. I think more likely we're going to remain a trading range day. The top of the range yesterday was over here, so we may stall around here. Bulls are hoping big sell climax and then just reverse up in a big bull trend all day. Today's reversal, here we had 8 consecutive bull bars. Today's reversal is not nearly that strong. Consecutive bull bars. Today's reversal is not nearly that strong. I suspect we'll go up a bit and come down and go sideways. It's still buy the close, but fewer bulls will take the buy. Possible double top 13. Second leg up after 23, 24. Possible parabolic wedge 19, 24. So bulls are more cautious. It's still bullish, but they'll be quicker to get out below a bear bar closing below its midpoint, 2 or 3 points below a bull bar. They'll look to buy again on a reversal up from the moving average. And for the bears, double top 13, but reasonably strong reversal up. So fewer bears will sell below 27. They'll wait for it to go sideways for a few bars and form a micro double top and then look to sell. I am back to flat. This is not doing what I want it to do, even though it's still always in long and it could continue up all day. I think it's more likely a continuation of yesterday's trading range. And what did we do with this price yesterday? Well, we sold off here. We sold off here. We sold off here. Sold off, sold off, sold off. So we're in an area where the market had a hard time rallying. It kept selling off from around this area. What happens if it keeps going up? Well, I'll figure out some way to get long again. Whenever there's a pretty good chance of a trading range day, I tend to take fairly quick profits on the first part of my trade, or maybe half my trade, and then I'm quick to get out if I'm disappointed on the remainder. For the bulls, a high one, 27. Might get a third leg up, 24, 26, and I'm not willing to buy it. There might be more sellers than buyers above because of a possible parabolic wedge, 24, 26. And for the bears, a double top, 13, but I'm not willing to sell it. 7-bar bull microchannel and only a bear doji. So right now, I got to wait for more information. More information means more bars. So it's better to patiently wait, and sell below 8 or 9, and then, buy above the neckline or above 23, and take quick profits and on a trading range day, and just do that repeatedly. You buy above 20 or above 23, hoping for a huge rally, but then when you see a shrinking bar 24, a bear bar 25, a smaller bull bar 26, the odds of a huge rally become less, and therefore it's reasonable to treat it like a trading range day. It goes up, it gives you 5 or 10 points profit, take the profit, and then look for the next trade. If it continues up and becomes a strong bull trend, then trade it like a strong bull trend. But that's not what we have yet. I'd sell, so maybe more buyers than sellers below 27. Bear bar closing near its low, I get out of longs. And it's a credible swing short, double top 17, but I'm not willing to short yet. Now, if you're a bull, you're obviously disappointed, all right? And I expect that because I think it's a trading range day. So I expect the market to do something good for the bulls and then reverse. Do something good for the bears, 17, and then reverse. So it's better to take relatively quick profits. Might test 19 high, the breakout point. Bulls hope to get a high 1 or high 2 at the moving average. They hope that it holds at the moving average. The bears want to get a third bear bar. They want a third bear bar closing on its low, closing below the moving average. That would increase the chances that will go lower, like at least a tick below the breakout point, 19 high. Bears who are willing to hold to see if we get to a new low of the day can sell at the market, sell below 29. I still think it's more likely this is a minor reversal. A test of support, moving average, maybe 19 high. 23 closing above 19 and above the moving average, I think reduces the chances that this is going to be a double top and the start of a bear trend. It increases the chances that this is a pullback in a bull trend. If you did short below 27 or 28, I'd get out above a bull bar 29 or above 26, and the bulls are hoping for a high 129. But you see any problems with it? Yeah, one is tight trading range 25, and 29 is so big, you're being forced to buy at the top of the range. And that lowers the probability, and the bar getting big increases the risk. That will reduce the number of bulls buying above 29 or above 26. So if you buy above 29, where's your stop? It's probably below 29, but the math is not great. If you're buying it, you have to be buying for a swing. You'll probably be disappointed, and you'll probably scalp out within a bar or two. But, high 1, I would prefer to have it dip. I would prefer to have this bar be a point or two lower, dip far below support and reverse up. I don't want to be buying at the top of a tight trading range, right below a double top, far above the moving average. So I won, but it's really not. There's an increased chance it's a trap. And for the bears, well, if they did short, they'll get out above the bull bar 29 or above the top of the reversal 26. It's still always in long, and because of that, it's an okay buy above 29. I'm personally going to wait. It's not doing what I want, and when that is the case, I usually wait. Might get a wedge, 19, 26, and then up here, just like we had a wedge here. A lot of times the market gets in a certain mindset that keeps forming variations of the same pattern. Yesterday we had a big triangle, and then at the end of it there was a small triangle here, and now we have a bigger triangle. So we got 1, 2, and maybe 3, and we have a higher low here. So it's clearly in a triangle type of mentality. Sometimes you get a lot of double tops, double bottoms. Other times you get a lot of wedge tops, wedge bottoms. Yesterday we had a lot of wedges. We had a wedge down, and then a wedge up, and then a wedge down. Today we have a wedge down, and if we go up here, possibly it'll fail and form a wedge up. My goal is to make money, and sometimes you get setups, and there's something that's just not quite what I want it to be, and I'll let it go. And the result is sometimes I'll miss really big trends. I don't care. All I care about is if I take a trade, did I take a trade that makes sense? Did I manage it well? That's all I care about. So all I care about is what I'm doing, not what I'm not doing. I prefer to, on a day like this that is not clear, I prefer to assemble as many pieces as I can and try to get a good day out of it. And I know I'm going to miss some trades that turn out to be very good, but that's okay. I never worry about it. There's always going to be another trade. By the way, 35 years ago when I started doing this, I used to always worry that the market would stop, that it would no longer give new trades, that sometimes the market would be in a very tight range for 3 or 4 days, and I'd start thinking, oh my gosh, they may be like this forever. And that's nonsense. It's always going to be doing everything. The purpose of a market is to make it easy for institutions to trade. There are always institutions that want to buy. There are always institutions that want to sell. And having a market makes it easy for them to trade. There'll be a lot of participants looking to sell, looking to buy. And the result is the bid-ask spread will be relatively tight. Now, the purpose of the market is to facilitate trading. Facilitate means make it easier to trade. And what is the easiest thing? What is the most important thing to make it easy to trade? Volume, right? The more volume, the more participants, the easier it is to buy when you want to buy, sell when you want to sell. But how does the market create volume? Right? By forcing traders to trade. How does it force traders to trade? By creating pain, right? So the market tends to move in the direction that will cause the most pain, the pain trade. And that forces traders to act. So if it's collapsing, the bulls are forced to buy back shorts. If it rallies too strongly, the bears are forced to, if it goes down, the bulls sell out of longs. If it rallies strongly, the bears buy back shorts. So it's always probing. And one of the reasons why you get these crazy big legs like that, or like that, and then the market reverses, is because it's not just probing on the 5-minute chart, it's also probing support and resistance on daily and weekly and monthly charts. And sometimes the support or resistance is far below. So here it tested the 100-day and the 100-day and the 50-day moving average on the daily chart. And the result was we had a very big move down, a huge move on the 5-minute chart, but it's simply a test of support or resistance. So you have all time frames operating, and sometimes the market will test support or resistance on a higher time frame, and the result is a very big move on the 5-minute chart, and then it immediately reverses once it hits the higher time frame support or resistance. Right now, we have a double top and a reversal. A low 2, 27.30. I'm flat. Looks like we're going to test the breakout point, 19 high. Bears are hoping we break below the neckline, 17, and fall for a measured move down. But I think it's more likely we're in a trading range, that it will go up to resistance or above resistance and reverse down, and then down to support, and then reverse up. But it looks like we're going to dip below the breakout point here. I'm currently flat, so right now I'm stuck on the sidelines. Bulls want a higher low or a double bottom 21, and bears want a breakout below 17 and then a measured move down based on the height of the double top. So we have a double top and the neckline here, and bears want a measured move down there. I do not think they'll get it. I think today's going to remain a trading range, the second day and a trading range day, but we may get down to the 21 low and get a higher low double bottom. The E-mini tried to reverse up from a wedge bottom, 18, and instead reversed down from a double top up here, a wedge rally to a double top, and then a very big breakout below the wedge bottom here. The market fell for a measured move based upon the height of the double top here and tried to reverse up. There was a small expanding triangle, 34, 38, 40, and also a wedge, 17, 35, 40, and an II. We got a couple legs up, and that was a wedge rally, both to the 60-minute moving average and one tick above the breakout point, the 17 low. And the market has been reversing down since. The lack of consecutive strong trend bars, up or down, resulted in the market forming a trading range since 36. Very often you get a strong trend and then a doji, and that doji is a sign of neutrality. It increases the chances that the market will soon evolve into a trading range, and it did. It started to go sideways exactly at bar 36. The bulls were hoping that this is a higher low double bottom, a wedge 50, 58, and we get a higher low major trend reversal, but we have 5 or 6 bear bars. It probably will not be a major reversal. It's possible we might bounce to the moving average or again to the 60-minute moving average, but we're probably not going to get a bull trend out of it. Also, we're running out of time on the day, and the bears are hoping that we continue to get new lows and lower highs. We have a lower high, a lower high. We have a low. The bears want another breakout below here. But look what happened. We broke strongly below 17 here, yet we went back above the 17 low there. That will encourage bulls to buy either at the 40 low or somewhere below the 40 low. They'll bet that we'll get back above the 40 low by the end of the day. What's a little below 40 low? Well, some might buy the 40 low and then buy more 5 or 10 points lower. Others might not buy the 40 low. Instead, they'll buy 5 or 10 points lower. And others will not buy with a limit order. They'll wait for a reversal up from around the 40 low. It could be a double bottom, it could be a higher low, it could be a lower low. And for the bears, low 159, but a doji bar, 58 big tail in the middle of a trading range, so it's not a very strong sell. Higher probability selling below 60, a bear bar closing near its low, but it's probably going to be a minor leg down. There should be buyers in the neighborhood of the 40 low. The day has 81 bars. The middle of the day is 40 or 41. The market has an increased chance of reversing around those two bars. And you can see it reversed up exactly at 40, 41. So a perfect midday trend reversal. However, it turned out to be a minor reversal, a test of the breakout point and the 60-minute moving average. So is this sell the close right here? Well, we're probably always in short again, 58, 59, but it's in the trading range. And by the time the market becomes always in short in a trading range, it usually is time to start looking to buy. Trading ranges typically look most bullish at the top, 54, 55, and most bearish near the bottom, 40 and 61. So you want to buy low, not sell low, even when it looks strong. You want to sell high and not buy high, even if the rally looks strong. Now, this is a 7-bar bear microchannel that will reduce the number of bulls buying about 61. For the bulls, it's a double bottom with 40. So it's a double bottom major trend reversal. Some bulls will buy above 61 if it's a bull bar. Other bulls will wait to see if we get consecutive bull bars or maybe a test down and form a micro level bottom with 61, maybe 63 or 64. For the bears, I would get out if they shorted below 56 or 57. If they're not already out, I would exit one tick above the bull bar, maybe 61, or a point or two above any bar, either 61 or 59. Trading range, so you'd expect everything to be unclear. So a bad sell below 58, you can see we're already back to the price where the bears sold, and a bad buy above 61. So really not good math. Now, we're running out of time. You could buy above 61 and use a wide stop, maybe 10 or 15 points below the double bottom, betting that if it does go down here, it'll get back above there. Alternatively, wait for it to go sideways for a few bars and maybe get a micro level bottom like 40 and 43. Or you wait for a surprise bar up and then buy. It's not going to be clear. The market has not been clear. It has not been going strongly up or down since 36. And that's probably going to remain that way for the rest of the day. Can you sell on a stop below 61 or break out below a double bottom? The problem you have is we had an incredibly strong breakout 34 below 17, yet we went back above the 17 low. And therefore, traders are pretty confident if it goes below 40, it's going to come back above the 40 low before the end of the day. So that makes the math worse for bears selling at the low. If you're selling, it's better to be selling rallies. And if you're buying, it's better to be buying sell-offs. This is a sell-off, so it's better to buy. If we start to get 2 or 3 consecutive bear bars breaking far below 40, it could become sell to close again, but that's probably not going to happen. It's really important that 55 went above that 17 low. That means despite a very strong breakout 34, bulls buying with limit orders still could make money. They buy more lower. It gets back to their first entry price, 17 low. They can exit with a profit. It has to go 1 tick above that 17 low for them to get out break even if they bought at the 17 low, and that's exactly what happened. Bulls trying to get a micro double bottom, 61, 62, and bears trying to get a strong breakout below 40. However, I'm not going to sell below 40. I'm looking to buy. I'd like to see the market go sideways for a few bars, like it did here, and get some bull bars, and then buy with a stop, or buy with a limit order below a second bull bar, like 42. I don't want to sell down here. And as I said, if we break below, we should come back above that 40 low. So I don't want to be selling down here because I know we'll soon get back above that red line. So selling, I want to sell at the moving average or higher. I don't want to sell down here. This is where I'm starting to look to buy again. Breakout, bears want a measure move down based on the height of this wedge, but more likely will form an expanding triangle, 35, 40, and 62, or maybe a little bit lower. Got a little micro wedge here, 58, 61, 62. 8-bar bear micro channel. So that will reduce the number of bulls buying the first reversal up. Actually, it's a 9-bar bear micro channel since the 55 high. Now, outside down 62, what about selling below the outside down bar? You know, like I said, I don't want to be selling at the bottom of a trading range at the end of the day, especially when bulls made money buying the 17 low, using a wide stop and scaling in. So if it falls from here, I'm probably going to not sell. I'll probably just let it go. I'm looking to buy a reversal, but I'd like to get as good a reversal as I possibly can. Buy above 61. It's a micro double bottom. It's a micro wedge, 58, 61. It's an expanding triangle, 35, 40. You know, the 9-bar bear micro channel lowers the probability. What about buying above 63 if it's a bull inside bar closing in its high? A lot of times you'll get that where you have two different reasons to buy. You buy above 63, a bull bar closing near its high, or you buy above 61, which is the neckline of the micro double bottom. If it's a good enough buy signal bar, it's reasonable to buy above 63. It's also reasonable to buy above 61. In a trade like this, where the math is not all that good, you can increase the probability by waiting to see if we reverse up strongly and then buy, or you can reduce the risk by buying small and then adding on if you start to get a series of bull bars. A very tight bear channel like this, unlikely to become a bull trend. We may bounce to the moving average, but it's unlikely to keep going up much beyond that. You look at it and say, yeah, I want to buy, but it doesn't look good enough. Well, that's the way a trading range is. The buy and sell signals do not look good enough. Selling below 56, not great. After 4 bull bars, selling below 57, a little bit better. And the same here. You could buy here above 63, you could buy above 61, or you could wait to see if we get a couple bull bars and then buy, or wait to see if we go sideways for a few bars and form a double bottom. And for the bears, it's a low 164 or a low 163, even though 63 went below 62. But I'm not willing to sell down here, at least not yet. I might, depending on what happens here. But at the moment, I'd rather look to buy. What happens if you bought 63 and 64 is a bear bar closing on its low? Well, you could get out below 64. You can get out below 63. You can get out 3 or 4 or 5 points below 63, betting that there'll be buyers not far below its low, which is true. There probably will be. And for the bears, as I said, it's just not bearish enough since 36 to sell at the low. Bull is trying to get a second reversal up. Micro double bottom, 63, 65, neckline 64. So you can buy on a stop above 64. You could still be long above 63. For the bears, it's a low 164, but as I said, I don't want to sell here. I want to buy here. So I'm either going to be long above 63 or above 64 or above 65. Minimum goal is the moving average, and it's a micro wedge, 58, 61, 62. The start of the wedge is the 59 high, so that's also a magnet. We got this breakout point 50. So we got 3 things going on here: 50 low, 59 high, moving average. Might get back up to the 60-minute moving average and yesterday's low as well. That's the high 2. So it's a reasonable swing by, excuse me, taking a chance that we go up to the moving average, the 59 high, the 50 low, and if you're lucky, up to the 60-minute moving average. The bears will try to get a low 2, 64, but they'll need a pretty good bear bar. Low 2 but a bull bar. So what do you do if you're long? You can get out below 65. You can get out 2 or 3 points below 65. You can get out below a bear bar, maybe 67. As far as shorting goes, I really don't want to short down here. We're starting to get bull bars, and we're at the bottom of a trading range. I am long, and late in the day like this, I'm more inclined to get out when I'm wrong. I was going to add on higher, but it did not go higher enough for me to add on. So I'm long a small position, and I'll probably get out 2 or 3 points below 63. I exited. Now I'm debating whether to short. The bears got a successful breakout on 34. They're hoping to do the same here, but I think the odds are against it. Sideways for a lot of bars here. Might get a measured move down from the high of the day. Let me change this measured move to here. So that would be down here. It's certainly within reach. Is 67 going to be more buy the close or sell the close? Is the breakout going to fail? I think the odds are against it going down very much from here. Breakout point now is here, so that's the target for the bulls. Some bulls are scaling in. Like I said, instead of buying the 65 low, they might buy 5 or 10 points lower. That could be buy the close, so that's not a good sell the close bar. So far, limit order bulls who scaled in at the 63 low have lost money, or they're losing money. Bears trying to get a low 168. They're hoping that we fall for a measured move. We may simply fall for a measured move based upon this double top, this small double top, instead of based on the trading range. Especially since we have a measured move down from the upper range around the same price. Excuse me. So here, this is possibly a measuring gap, even though this overlapped that. The problem with the math here is if you sell, we're probably going down here, but if you sell, there probably will be buyers here. So about 5 points down, there'll be buyers, 6 points down, but you have to risk 15 points to make 5 points, and that's bad math. So if you're selling, you're betting it's going to break far below that measured move, but I don't think it will. I think there probably will be buyers right around there. So it's difficult to short at this point, despite the low one. Can you buy above a bull bar, 69 or 70? It depends on what it looks like, and it also depends on whether or not it reaches the measured move target and reverses up from that target. If you get a strong bull bar reversing up from the target, you probably can buy it. Otherwise, better to wait for it to stop going down, start to go sideways for a couple of bars, and then buy like 40, 43, and like 63, 64, but that one just didn't work. We're getting near a retracement of half of that rally. Here's the 15-minute chart. So we'll get a strong rally from here to there. And that's a 50% retracement. Looks like we're probably going to get there. I don't know if we'll get there today, but it looks like that's what the market is trying to do right down there. Near the measured move, based upon the gap between the 17 low and the 55 high, they overlap, but this is the gap bar. And I usually look at the measured move from the breakout point, which is right there. We're so close to the 50% pullback that I think we'll get there today or tomorrow. At minimum, bears, I'd get out of shorts above a bull bar, especially a bull bar closing near its high. I'd get out of shorts maybe a point or two above a bear bar 67. And for the bulls, it's a swing buy. We still have magnets a little bit below, and we may get there. So it's not an ideal buy. A lot of bear bars in a pretty tight channel since 56. Another one of those examples, if you buy small. If it starts to go up, you buy more as it goes up. For the bears, if it's an inside bar, it's a low one, but I'm not selling because we're in an area where I think there probably will be profit taking. I think bears will buy back shorts, especially late in the day around this measured move and maybe the 50% pullback. And I think we'll get to the 50% pullback today or tomorrow. So even if we do rally into the close today, I think we'll get there tomorrow. Bulls trying to get back above the breakout point, the 40 low. And I think they will. So I think before the end of the day, we'll be back above the 40 low because we had an even stronger breakout here, yet we got back above the breakout point. Another target above is the 65 high. That was a reasonable buy. And normally if you do something reasonable and the market goes against you, and then you get another bull bar closing near its high and you take that second buy, if you held long from above 65 and then bought above, let's say 70, 80% of the time, it'll bounce at least to your average price. So you could get out, break even on the trade. So if you bought above 65 and if you buy above, let's say 70, that's your average price. 80% of the time it'll get there. So you could get a loss on this, but you get a profit just as big on this, and you get out break even on the entire trade. Bulls trying to get a good bull bar. Because of the three bear bars, the probability is a little bit less. And the other problem is we may not get much above the 41 low. We've been having a hard time getting above the moving average all day. We gapped above it on the open, went below it. Broke pretty strongly above it here, failed. We broke above it here and here, failed. And therefore, if we do go above the moving average, I think we're probably not going to get much above it. Not a very good buy signal bar, but bears, I get out of shorts 2 or 3 points above 70, 69 or one tick above 70. And the bulls, it's a buy, but it's not great. So it's better to trade small or wait for consecutive bull bars or wait for it to go sideways and then get a second buy. It's a third reversal up, 1, 2, 3. So it's a big wedge, but not a good buy signal bar yet. Market's deciding, is it going to get to the 50% pullback today, or will it wait for tomorrow? Bears, it's a low 170, but a bull bar. We had a low 266, yet we fell 15 points. So the bears are hoping that we do the same here. I don't think we will. I think we're going to get up to that 65 high before the end of the day. We may go a little bit lower first, but I think that's where we're headed. Might get a nested wedge if we get one more leg down, 1 pullback, 2 pullback, 3, and that would be nested within a bigger wedge, 1, 2, and 3. Micro double bottom 35, 37 failed. Micro double bottom 63, 65 failed. Micro double bottom 40, 43 succeeded. micro double bottom 18 and 22 succeeded. So half of them have been good, half of them have been bad. The better a bull bar, the more likely this will go up above the 42 low to the 65 high. The less good a bull bar, the more bulls will wait for the following bar. For the bears, an inside bar, it's a low one. 71 made a new low, so it's a low one. You can call it a micro double top, but it probably will be a final bear flag. There probably will be buyers below around that 50% pullback. It's possible we can get all the way down to the open of the week today. I don't think we will. So far, the week has a bull body, but if it gets below the open, the weekly chart will have a bear body. Will 72 have a bear body, and will bears sell below to get down to the 50% pullback? Or is this going to be the low of the day, and will we get profit taking into the close and get up to the 65 high? The more 72 closes on its high, the more bulls will buy, and the more bears will buy back shorts. Reasonable buy, taking a chance that we get a short covering rally. I did buy it. I'll get out if we get a low 2 with a decent sell signal bar. It bounced exactly 10 ticks, and that's exactly what 2-point scalpers needed to exit. I did take part off at 2 points, but I'm still long part right now. You go short on a stop below 71. A breakout was a successful sell below 17 and below 65, 63. But I'm not willing to short down here. I think we're going to try to get profit taking into the close. I'm just not sure if we get down to these targets before we get the profit taking. Right now, I'll get out below 71, and if it reverses again, I'll buy again. And I'm not shorting below 73. If 73 is a bear bar closing near its low, I'll get out below 73. But we're in a bear trend, a bear channel. We've been failing at the moving average all day, and therefore there will be a lot of bears willing to sell below 73. It's been a successful setup all day. A low 2 around the moving average. Setup all day. A low 2 around the moving average. If 73 is a bear bar, but it has a 2-point tail on the bottom, a small body, I'll probably keep my stop below 71. This is what I was talking about. Is it a good enough bear bar to sell below? Is it a good enough bear bar to exit longs below? I'm going to hold long, stop below 71. If it breaks below 71 and reverses up again, I'll buy again. If 74 is also disappointing, I'll probably get out around break even. I need this to start to go up quickly. If it does not, I'll exit sometime during 74 or at the end of 74. Not doing what I want, so I'm looking to get out. I'll be very quick to get out. I did get out during 74. I lost more than what I made on the first half when I exited at 2 points. I lost about 4 points on this half. I made about 2 points on that half. Can you buy the close for a scalp? Traders will do it, but we're so close to the 50% pullback that I think we're probably going to get there. Possible nested wedge, 1, 2, 3 within 1, 2, 3. I'm going to get rid of that measured move. I will buy again if we get a decent buy signal bar of 75. The short was below 73, and I did not take it. 2 reasons. One is I don't like to reverse And the second reason is a fairly prominent tail that lowered the probability. No sign of a bottom and getting late in the day. We can still get profit taking, but if we do, it probably will not be very much. I would need a pretty strong buy signal bar to buy. And I'm not selling this far down. The bears have been selling rallies. Here, low 2 bear flag, low 2 bear flag. But the sell signal bars, 66 and 71, were not good enough for me to short. So I am flat. We're accelerating down, so we may get down to the open of the week. But for me, unfortunately, I'm flat. So I'm probably not going to take any more trades. Right now, it's probably sell the close, sell the market, but I'm going to wait for tomorrow. Here's well, I'll do a 60-minute chart. Here's a 60-minute chart. The bears are hoping that this is such a strong leg down that this is just a pullback and that we have to test this low. Bulls obviously are hoping that we reverse up around 50% down, which is where we are right now, but no sign of a bottom. If there is a decent bull bar, we could get some profit taking, but it's really late in the day, and the trend has become much stronger over the past 20 bars. So I'm not going to do anything. I'm not going to buy. I'm not going to sell. Big sell climax. We still might get a sharp profit taking rally at the end of the day, but the math is difficult. A lot of times you'll get the buy signal bar, and then it just goes a point or two above and then goes sideways. At a minimum, I'd get out of shorts above 77. If it's a big enough bull bar, you could take a chance, but I'm not sure that it's worth it because a lot of times it'll just be minimal. You just go up a little bit and then just go sideways. If this was 3 or 4 bars earlier in the day, I would be much more interested in buying. If I'm taking a counter trend trade, at the end of the day, I usually want it to be before bar 75, 12:45 p.m. If you get a counter trend trade after that, there's too much risk that it just doesn't go up, it just stays sideways. And there's not much time left, so that reduces the profit potential. The bar is about 9 points tall, so your risk is close to $500 per contract at the end of the day without a lot of profit potential. There are only a few bars left. You still sell the market, sell the close. We might get down to the open of the week, but this is about as far below the moving average as we've been all day. And, just like there's not much time left for the bulls, there's not much time left for the bears. Time means points. If there's not much time left, the market has a hard time going very far, making many points. The market's ignoring the 50% pullback, so I'm going to erase it. Bar 78 usually has the biggest volume all day. It's a nested wedge, 1, 2, 3 within 1, 2, and 3, but only 3 bars left. And so I'm going to wait for tomorrow. I don't care if it rallies strongly. I don't think it will, but it might. Anyway, a pretty good day for the bears. We kept failing at the moving average all day, right on the open. We had a triangle yesterday, after a couple of day rally, and the triangle late in a trend is often a final flag. This is the 5-minute chart over the past 4 days. We had a very strong rally, and then yesterday we had a triangle, and we broke above it. The breakout failed, and it became the final bear flag. But not only do we pull back to the triangle, we just kept going down, and we retraced about 50% of the rally, a little bit more. It was more likely that we would stay sideways more, but this is where we are. Sometimes when you have a really strong rally, you get a really deep correction. I'll put up a 60-minute chart. And sometimes when you get a very deep sell-off, you get a very strong rally. This is a 60-minute chart. We're right in the middle of the trading range for the past month. Bears are hoping it's a lower high major trend reversal. So reversal down and then lower high, a head and shoulder stop, left shoulder, head, right shoulder. And the bulls are hoping this is a pullback from this leg up. We have a higher low and a bull trend and a very strong rally. And the bulls are hoping, as big as today's sell-off was, it's just a pullback and that will go higher. Back to the 5-minute chart. I'm curious to see what the volume was. 106,000 contracts on bar 78. So this is how we started. Yesterday was a quiet trading range day, and then today, bar 1, we went above the November 22nd high, that blue line, and failed and failed and failed. And on the daily chart, that was the all-time high, and it remained the all-time high for about a month. We broke strongly above it, reversed down strongly, and I've been saying since we were down at the bottom of the channel that we probably were going to test that high. And we did. We rallied pretty strongly. I thought we were going to go sideways more, but the bears are reversing down today. Yesterday's a sell signal bar for a lower high major trend reversal, head and shoulder stop. But it's only a bear doji, and it's after 2 big bull bars. So I thought it would probably be a minor reversal, and that the bears would need a micro double top before they could get a big reversal down. But we've been in a trading range now for over a month, and you just get a lot of abrupt reversals. Big bear bars like here, followed by bull bars, big bear bar, followed by that, big bull bars, followed by bear bars, very strong rally, very strong sell-off, very strong rally, very strong sell-off. Lots of reversals, no sustained trading. We're still in the middle of it. The bears are hoping that this is a top, a head and shoulders top. The bulls are hoping it's a bull channel and that we keep going up. We still have half a month remaining. On the monthly chart so far, it's a bear bar, and it's a third attempt down, 1, 2, 3. If it's a bear bar at the end of the month, the bigger the body, the more the bar closes on its low, the more likely it will correct down for 2 or 3 months. An obvious target would be the beginning of the wedge here, which is the October low. And it's also not quite a 20% retracement. If we get there, a very strong bull trend, we'll probably find buyers and get a double bottom and then go up in the second half of the year, go up to a new high. I thought the odds were that we would go a little bit higher in January, February, maybe up to 5,000. And we still might. But if the month stays the way it looks right now, a bear bar closing below its midpoint, then we probably will correct down for 2 or 3 months. Can we correct down for 4 months? Probably not. Look at the screen. How many times do you see 4 consecutive bear bars on the monthly chart? This is in the past 8 years, 9 years. Never. Right? We've had some big corrections here, 38%. And 3 bear bars, but not 4. So if we correct down, it probably would be 2 or 3 bear bars down here to the October low. Weekly chart sideways now for 8 weeks, and we're right in the middle of the tight trading range. The bears are hoping this is a final flag, that we broke out above and that we reverse down. They want to get down here to the October low, and the bulls are hoping that the bull channel continues. daily chart, it's already a wedge. You got 3 legs up, 1, 2, and 3, and that created the micro wedge on the monthly chart. 1 bear bar, 2 bear bar, 3 bear bar. And the bears are hoping that this is the start of a correction down to the December low, maybe to the October low. I think there's a, I don't know, pick a number, 50% chance, 40% chance. I'd say maybe a 40% chance we get all the way down to that gap on in April over here. So, 3,900 below 4,000. We have a gap. It's on the daily chart, it's on the weekly chart, and it's on the monthly chart. Hard, it's impossible to see, but there is a gap here around 4,000 up in here in April, and we may come down and test that gap this year. Do I think we will? Right now, probably not. But if we start to get a series of bear bars on the monthly chart, then we probably will. So today began with a continuation of yesterday's trading range trading, and we reversed twice below the November 22nd high. And I said it was a low 2, but I also said the bull bar, bar 6, not a very good sell. A lot of traders would wait for a bear bar and sell below bear bar 7 or 8. So to me, the sell was below 7 or below 8, and you're taking a chance that we get a swing down, maybe to the bottom of the range. We have this triangle, apex of the triangle here. Might get down to the 60-minute moving average in yesterday's low, 4,700, big round number. And we did. We sold off pretty strongly. Bulls tried to reverse up on 12. Then we have in 00 here. We have outside up 12, outside down 13, but a pretty big tail on 13 that will reduce the number of bears selling below 13. So not a lot of sellers below 13. Bulls trying to get a reversal up, but nobody wants to buy above 15. We have 3 consecutive bear bars, so it's still on the short, stop above 13. And then 16, bulls tried to get a little micro wedge, 10, 13, 14, 16, and instead we got a bear breakout, a pretty good bear breakout. But look where it is. It's right at the 60-minute moving average and right above yesterday's low. It's pretty common for the market to sell off strongly to just above yesterday's low and then reverse up for the remainder of the day. Also, if we do reverse up here, it'll be a wedge with 2 and 10, so that would be another reason for it to reverse up. The bulls want a double bottom with yesterday's low and a wedge, a tight bear channel, but if we start to get bull bars, traders will buy. Bull inside bar 18, at a minimum, I'd get out of shorts. We have a wedge at the 60-minute moving average and the test of yesterday's low, so it's a higher low double bottom with yesterday's low in a bull trend. So I'd get out of shorts. You could buy, or you could wait to see if we get 2 or 3 bull bars and then buy, or wait to see if we get a second buy signal bar. For the bears, micro double top up on 18, down to 19, up on 20, but it's a bull bar, and 18 was a bull bar, and we're still on the 18 buy. So it's a low probability sell below 20, reasonable to get out of longs below 17. And for the bears, I would wait to see a strong breakout below 17 and then sell lower. And then we have a high 2 buy, 22. It's only a bull doji, but it's a good candidate for the low of the day. We might swing back up toward the high. Today might remain an inside day. 6 did not go above yesterday's high, and now we're not below yesterday's low. So it's still on the buy above 18. I think it's reasonable to buy above 22. It's reasonable to buy above 20. The neckline of the double bottom, 1721. Then we have a bull bar 23, and not only is it a pretty big bull bar closing on its high, it closed above the 19 high, the neckline of the double bottom, and it also closed above the moving average. So we should go higher. The bears will try to get a double top with around 13. We have a strong breakout, so a spike down and a pullback, and then channel down. The market often gets to that start of the channel, the 13 high, and the bears try to get a double top. At a minimum, they try to convert into a trading range. But 23, 24 consecutive bull bars with at least one of them big and closing near its high, plus it closed above the moving average and above the 19 high. So I think we'll go higher. We should get a second leg up at a minimum. Pause 25 and then second leg up 26. 24 smaller than 23 and 25 bare body, 24 bigger tail on top than 23. So this might be a double top 13, and some computers will see it as a wedge, 3 legs up, 19, 24, 26. So if I'm long, I think it's reasonable to get out of longs and wait to see if we break strongly above 13 and then buy again. And for the bears, at this point, it's a 7-bar bear microchannel, so I don't want to short below 27. Bulls a high one, 29. But my problem with 29 was it only dipped a little bit below the moving average, and it's forcing you to buy at the top of a tight trading range. So I don't want to do that. Let me change the scaling on this. Let's go back there. So when I see that really good buy signal bar, but it only dipped a little bit below support, I usually do not buy it, especially when we're at resistance, possible double top 13. So I would not take that buy. And then the bears had a bear inside bar 30. So now it's a low 2 top, 20, 27, and 30, and it's a double top bear flag. This could be a second leg trap in a trading range day, so 1 pullback 2. So it's a reasonable short below 28 or below 30, but we'll probably get a higher low and then a breakout above the double top. And we did the low probability event. You see 31 and say, wait a minute, that shouldn't have happened. That's a low probability event, a bear surprise. And whenever the market does a low probability thing, everybody's trapped. Bears are trapped out. They missed the short. And bulls are trapped in. They were hoping for a pullback and another leg up. And so you have a whole bunch of traders who need to sell or want to sell. And therefore, we're probably going to have at least a small second leg down. Just like 23, 24, a bull trap, you'd expect a second leg up, 26. Here we got a bear trap, so we should get at least a second leg down. Bulls, I would have gotten out below 27, 28. I definitely would have gotten out below 30. And bears, some would sell below 28, some would sell below 30. And now 31, you have a lot more bears trying to figure out how to sell. For the bulls, they're hoping that 31 is a pullback from the breakout above this bear channel. But 32, a fairly conspicuous tail on top, and 31, a very big bear surprise. I'm not going to buy above 32. I'll want a second buy. There probably are sellers above 32. And you sell below 32. I prefer to sell below a bear bar closing near its low. And 32 is bad follow through after 31, so I don't want to sell below 32. But then we got another bear bar 33. The bulls are hoping we'll get a double bottom 21, a double bottom higher low major trend reversal, or a double bottom 17. And the bears are hoping that we break below 17. It's a wedge bottom, and it's also the neckline of a double top. Double top 13, 26. The bears want to break below and a measure move down, 20 points down, and that's what they got. So rather than selling below 33, when we might get a double bottom, 21 or 17 at the 60-minute moving average, it's probably better to either sell below 17 or wait to see what the bar looks like below 17 and then short. And we got a very big bear surprise, 34. So we're probably going to get at least a small second leg down. We closed below 17. We closed far below the 60-minute moving average, far below yesterday's low. So probably we'll get follow through. We might fall for a measured move. Bear follow through 35. It's sell to close, but it's a surprisingly big bar 34, a big tail 35. We may bounce back up to test the 60-minute moving average. Yesterday's low and then today's low. So it's sell to close, but you need to stop probably above 34. So I'm not sure it's worth selling the close. It's probably better to wait for a low 1 or a low 2 and then sell again. Bulls a micro double bottom, a failed breakout, low of the day, a decent bull bar closing on its high. It's a credible buy, but we may be forming a trading range instead of a bull trend. So it's a tricky buy. If you buy above 37, you could put a stop below 37, or you could trade really small and add on if it goes higher. And if it gets out below, if you get out below 37, you can look for a second buy and buy again. When things are not clear, I tend to trade small and wait for it to go my way and then add on. There's a micro double top, 36, 38, but and clearly strongly down, 31, 34. Might get a measured move down from below that wedge, but we're not quite to the moving average. So, and we have two bull bars and a big tail, 35. So I'm not willing to sell below 38. What about below 39? A bear bar closing near its low. If I'm long, I typically would get out below a bear bar closing near its low, 39, or below 37. But I suspect we're going to try to bounce and test that 17 low in the two moving averages. So if you sell below 39, you got to be pretty quick to get out if you get a bull bar. At this point, I think best choice is flat. Consecutive big bear bars that sell to close, but minimum stop above 38. So I would not sell that close. 35, we tried to bottom. 37, we strongly tried to bottom. And 41, sometimes you get a midday trend reversal, and midday is 40, 41. Sometimes a few bars before, a few bars after. But there's an increased chance if you're going to get a midday reversal for it to happen exactly on 40 or 41, the exact middle of the day. Expanding triangle, 41 with 37, 35. We're around a measure move down from this double top. I think it's a credible buy above a bull bar closing near its high. So I would not buy above 41, but 42 looks good enough. This could be the start of a swing up. So I'm going to buy above 42 and see what we get. If I buy above 42, where's my stop? It's not below 42. At a minimum, it's below the low of the leg down, so below 41, or a few points below there. Allow for the possibility that we go a little bit below it and reverse up again. 37 went a little bit below that, reverse up. 40 went a little bit below that and reverse up. So I think that if we get below 40, it probably will reverse up. I think it's best choice for most traders, put the stop below 40 and see what we get. 42 outside up, 3 consecutive bull bars. I think traders will start buying closes and buying above bull bars closing near their highs. 44, 4 consecutive bull bars, but a fairly conspicuous tail. The bears will try to get a double top 38 at the moving average. I think we'll probably get a couple legs up. It's a fairly climactic sell-off. We got a second leg down. We have an expanding triangle. We have a wedge, 1, 2, and 3. So I think we'll probably get a couple legs up. So I don't want to sell the first reversal down. Bull micro channel, not getting pullbacks. 47 closed above 38, so double top 38, 44, and we're closing above it, but barely above it, and we have a fairly conspicuous tail. We're closing above the moving average as well, also good, but we're right below the 60-minute moving average. We might get above the 17 low, but the bears will try to get a reversal down from around there. Now, what about shorting below 47, 48, 49, and II, a low 2, 42, double top 38? Too many bull bars. We have 7 bars without a bear body here, and we have a sell climax. We'll probably get a couple legs sideways to up. So I think it's okay to get out of longs below a bear bar closing near its low, 49, but I'm not willing to short. Bulls trying to get a high 150. Little double bottom, 50 and 45. It's still a high 1. You can call it 2 legs down, 49, 50. You can call it a little lower low double bottom, 49, 50, but it's a bear bar. 51, it's a bull bar, so I'm more willing to buy above 51. But I'm concerned that we did not break strongly above the moving average. We did not break above the 60-minute moving average, and we're starting to get bear bars, so I'm not sure we're going to go up all that far. 55, 4 consecutive bull bars, good. We went 1 tick above the 17 low and got a tail on the bar. We went just above yesterday's low. We went above the 60-minute moving average, but we have a fairly conspicuous tail. So this is possibly just a breakout test of the 17 low. It's also a wedge, 38.47. I'm not going to sell below 56 as a fairly conspicuous tail, but if we get another bar with a close near its low, I will start to short or look to get short. At a minimum, I'd get out of longs right around the close of 56. We're stalling at resistance and we have a possible wedge. And certainly we get out of longs below 56 or 57. We get a bear surprise 58. It's possible it's just a bear trap, a high or low major trend reversal in a trading range. So it's not necessarily yet a strong sell. For the bears, it's a low 1, 4 bear bars, but tail 58, tail 59. We still might get a higher low. So if you sell below 59, I personally would not. Well, I don't know. We have 3 bear bars, they're getting bigger. I don't like to sell in the bottom half of a trading range with a stop, and I don't like to sell below a weak sell signal bar. So I'm not going to sell below 59. Bear bar 60 and possible double bottom 61, double bottom 61 and 60. Am I going to buy? We got a 7-bar bear market channel. It's only a little doji. I'm not going to buy that. Outside down 62 and breakout below 41. So, it's good for the bears. So theoretically, you could sell below 62, but we reversed up 58, 61. We might reverse up here, expanding triangle 35, 40. So I'd rather sell higher. I don't want to sell down there. 63, a micro double bottom, 60, a lower low double bottom, 40. It's an okay swing buy. Excuse me, I'm losing my voice, but it's an 8 or 9 bar bear micro channel. It's probably better to wait for consecutive bull bars or a second buy. Bears, I'd get out of shorts above 63 just in case we reverse so sharply. Bears, a low 1, 64, double top 61, 64. We're in a bear trend, but it's a 4-bar tight trading range at the bottom of a 30-bar trading range. So that's really not a very good short below 64. The bulls are getting a second reversal of 65. It's a second reversal, good for the bulls. The tail is bigger, or the body is smaller than 63, but it's an okay swing buy. But if it does not go up quickly, I would get out of longs pretty fast. And 66 is a pretty disappointing bar for the bulls. You can either get out on the close of 66, you can get out 2 or 3 points below 66, but that's very close to getting out below 65, so it's probably better to get out below 65. And for the bears, it's a low 2, near the moving average. They're hoping that we break below the trading range and the double bottom and fall for a measured move down. But 2 bull bars, 3 of the past 4 bars, bull bars. It's a low probability bet. I'd rather wait to see a bear bar or sell if a big breakout is happening, sell as it's happening. 67, a surprisingly big bear bar. Close below 65, a gap 67 close, 65 low, might lead to a measured move down. So it's a surprise, so we should get at least a small second leg down. So it's sell the close, but right now you need a stop above 66 or 67. So you're risking a lot. You have to trade small. Bear inside bar 68, closing near its low. A credible low 1 sell, but in possible measuring gap 68 high, 65 low. But tail 67, doji 68, and then a trading range up here. Might only get a little bit more down. 67 surprise. If you want a second leg down, it could be just a bar or 2. So this is really not a great low 1. It's better to be selling a reversal down from the moving average 66, but that was a bull bar, so that was not great either. So if you sell below 68, you can get out above the bull bar 70 or 70. I did not sell below 68. Microdouble bottom, 70 and 72, a decent bull bar. I think it's a reasonable buy. 3 legs down, 1, 2, and 3. It's only 2 legs down here, 1, pull back 2, but it's a pretty good bull bar. And the second bar, 72, is better than 70. So I think it's worth taking a buy, taking a chance that we reverse up strongly. If it does not reverse up strongly, you can always get out. And for the bears, they can sell again below a bear bar, or they could sell on a breakout to a new low below 71. We had a little doji there, 72. Disappointing for the bears. It looks like a lot disappointing for the bulls. And it went up 10 ticks above 72. So it looks like a lot of the bulls were concerned that the rally above 72 was not fast enough, and they exited at 2 points, which is what I did. I exited half there, and then I exited the other half during 74, above the 72 low. I think I lost 4 points on the second half, and I made 2 points on the first half. The bears is the third leg down, 62, 69, so we might get a wedge reversal. We have a 50% retracement of this week's rally, not far below. Now, can you sell below 74? You know, you can, but I don't want to sell that low down, especially on a third leg, especially when so much of the day has been sideways. We had a lot of trading range trading through here, and then 20 bars here, and then here and here. So I'm trapped out. I want to sell closer to the moving average and below a better sell signal bar. So I'm trapped out. I'm not going to short down here. A low 175, similar to 59. 59, it only went down a little bit. This could collapse. It could get down to the open of the week, but I'm going to let it go. I don't want to sell that far below the moving average. Bulls trying to get a reversal up 78. I'm not going to buy it. A lot of times when you get these sell climax days, if they try to get a reversal after bar 75, a lot of times it'll just go sideways. So it goes above 78 and then just stalls. So I don't want to do that. You could go above 78 and get back down to the 78 low, and I'll lose 10 points in the final minutes of the day. So I'm going to not do it. Overall, a bear channel. We kept reversing down at the moving average. I'm going to put up a 15-minute chart. So you can see we broke above the moving average, reversed. Tried to get above it, reversed, reversed, reversed. I personally would not trade 2 different time frames. I just trade one time frame and try to understand it as well as you can. For stop entry traders today, I would not buy above 2. I would not buy above 5. I would not sell below 6, but I would sell below 7 or 8 or 9. What about buying above 12? Let me do it this way. What about buying above 12? Microdouble bottom. I don't know. I'm not going to do it. We have 4 big bear bars. And then we have an 0013, but a big tail below and possible final flag. A tight trading range late in a sell-off. So I'm stuck on the sidelines. I don't want to sell below 13. I don't want to sell below 15. I don't want to buy above 11, 12, or 15. So I'm going to wait. You could buy above 18, stop below 17. You could buy above 22, a second reversal up, but doji signal bar, not good. You could buy above 23, 24, but 24 is getting close to that 13 high, and the bears will try to get a double top there. If you bought above 24, disappointed 25, you might try to get out break even 26. For the bears, it's a micro wedge, 20, 24, 26, and a double top 13, but only a bear doji 25, so I would not sell below 25. You could sell below 28, or you could take the second reversal down below 30, or even 31. But 31 is pretty low. 33, a bear surprise, but we're right above the 60-minute moving average from yesterday's low, so that's not ideal. 34, we'll probably get a second leg down. So selling below is a high probability sell, but big risk. So we're probably going to get small reward. So not great selling below 34, below 36. Bulls, they could buy above 37, but if they're disappointed at 38, I'd get out. 39, you can call it a micro double top, 36, 38. 37 went below 35, so it's not really a low two, but it's pretty close. I think we're trying to bottom here, and I'd rather look to buy, so I'm not going to sell below 36, 38, 39, 42. I think that's a reasonable candidate for the low of the day, so I would buy above 42, stop below 41. High 145 for the doji and big tail 44. So this is not looking all that good. High for the bears at the moving average. We failed at the moving average up here, went above it, failed here and here. But a lot of bull bars, I would take a second sell. Also, you're buying a reversal up from a sell climax. So we should get a couple legs up. So even though it's a credible sell, I would not take the sell. And the bulls, is it a stop entry buy here? You know, I don't know. It's not looking all that bullish. Excuse me. It looks like we're going to try to go up, but unless it starts to accelerate up, this is going to be the top of a trading range around 48, around 17 low, possibly a bear flag. So you can buy about 52, 53. 54, okay. 55 tail on top. One tick above 17 low, just above the moving average. Bear bar 56, I'd get out of longs. Into short below 57, okay. Low one below 59, I'd rather sell below a bear bar closing there. It's low 60, but I would get out above 63. Reasonable to get long above 64 or wait for a breakout above the moving average. Low 2, 66, but two bull bars, not a great short. You could sell below the most recent low, 65, or you can wait for a bear bar and sell, like below 67 or 68. Reasonable, I'm losing my voice, reasonable buy above 72, low 2, 73, or double top 70, 73. For the bear doji, that's really not great. And then low 174, doji not great. So really tough to get short. You know, very good bear trend. We sold 50 points over the final 2 hours. But for stop entry traders, not a lot of great shorts. You know, below 56, below 60, below 65, below 68, below 71. But none of it, you know, it's really difficult to do. Limit order traders, what do? Now we have those 4 bear bars here, so they're probably sellers above 11 or 12, but they're 2 bull bars. That's not great. Might be buyers below 11 for the scalp. And then here, 18, we have a wedge, so probably buyers below 18, probably buyers below 20. And then here, probably buyers below 36, but that with that many bear bars, I don't want to take the buy. Maybe buyers below 38, but if you buy below 38, I would use a wider stop. 37 went a little bit below 35, so we may go a little bit below 37 and reverse up again. You know, really not, you know, I think if you buy the 38 low and you get 39, it's better off to get out below 39. 42, I think that's probably a pretty good buy. 2 bull bars, a second reversal up. Here, not good limit order sells above the bull bars and not good limit order buy below the bear bars. So really not good limit order trading. Here, you know, maybe sell above 69. You could always sell above prior highs, so you could sell 62 high, 70 high. So it's interesting. We went down 90 points on the day, so a huge bear day, but a lot of the stop signals were not ideal. On a day like that, I just try to take as many pieces as I can, and I don't worry about catching the whole day. And I got trapped out late in the day. I didn't do anything here because I just couldn't convince myself that the math was worth it. Okay, question, how can reduce and limit daily maximum drawdown, actual risk? I think the best choice, for reducing risk is trading a small position size. And you might be asking, is there some magical number that you have each day that if you lose that number of dollars, you stop trading for the rest of the day? I was, maybe 30 years ago, I used to do stuff like that, but it was more based on emotion. If I feel like I'm just wrong, 2 or 3 times in a row, I would assume I'm just not understanding what the market is doing, and I'd rather stop trading until I feel like I'm understanding what it's doing. So my situation is different from yours. I have a bunch of accounts, and so when you add it all up, I have a really big trading account, and I never can lose enough so that I get upset. I trade small enough so that I could lose all day, and at the end of the day, I could tell myself, so what? It's not all that much. But when you're starting out, you don't have a huge account, and you have to be careful. And if you lose 2 or 3 times in a row, and you start to, and you're down 2 or 3% of your total account, it's probably better to stop trading at least for an hour or 2 until you see something very clear. Al, can you talk about some of the trades you took today? I'm trying to remember. I think I sold below 7, or maybe it was 8. I think I bought above 22. I may have bought more above 23. I shorted. Where did I short? I shorted, I think, during 34, late. I don't think, I may have bought above 37 and used a wide stop, and then bought more above 42. I may have done that. And did I buy above 52? I did not. I shorted below 57. And here I bought above 65. And did I short here? I don't think I did anything in here. 72, I bought above 72, got out in part up here and in part down there. And I did not do anything here. So I did not short any of the last 15 bars, which sometimes happens. Sometimes it's a really big bear move, but there are reasons to think we may get profit taking. So I end up looking for the reversal up, and sometimes it doesn't happen. It usually does, but sometimes it does not. And I did want to sell, but I did not want to sell below 66 or 73, so I got trapped out. Okay, Al, what's your favorite scalp setup besides the standard limit order trading in a clear trading range? Yeah, my favorite kind of a scalp is, you hear me talk about it every day. If you get a whole bunch of bull bars, 3, 4, 5 big bull bars, and then it dips below a bull bar, I'll buy that low. Or if you get a bunch of bear bars, and if it pulls back a little bit above on the most recent bear bar, I'll sell that, betting we'll go at least a little bit lower. Try to find some examples like this. When you see that, a lot of times I'll sell that high, betting the first reversal up will fail. And if I see that, I'm going to buy that low, betting the first reversal down will fail. It's a 10-bar bull micro channel. Here, I've got 4 consecutive bull bars. I'll probably buy that low, looking for a scalp up. Here, you get a whole bunch of bear bars. I'll sell that high, looking for a scalp down. I think that's the single most reliable limit order scalp. You're scalping in the direction of the trend, and you're fading a bad counter trend setup. So, a bunch of bear bars, you got a bear trend, you sell above the high of a bear bar. It's a bad reversal. You get a bunch of bull bars, it's a bull trend. You buy at the low of the most recent bull bar, it's a bad reversal down. All right, hope everybody has a good night. Market's still deciding what to do. We've been reversing now for 2 months, and this is another reversal. breakout mode. Bulls are hoping that we ultimately break to the upside. I still think that's more likely. And bears are hoping that the wedge top is going to lead to a reversal, 1, 2, 3, to the December low, maybe down to the October low. Okay, hope everybody has a good night.